And that should cause the dollar to decline. And I'm getting more and more bearish on the dollar, on the US dollar. So that should be bullish for metals. The reason I'm saying that is any sell off in gold or silver is temporary. So that kind of confirms what I've been saying. That is just a technical correction. The market got tired of going up, and let's just trade back and forth and buy every pullback.
Dennis, how you doing?
Good, Andy. How are you? It's been a while.
It's been a while. Good to see you, man. So, want to get your thoughts here. Gold just really has been screaming up for the past probably 6 months or so. Silver's begun to follow, and then just fast forward the last couple of days, or even today, we've had it looks like a pretty good correction. Let's talk about what you're seeing, your technical indicators, what you're seeing, and where are we at?
Well, I think you're absolutely correct. It was a great rally in all the metals, gold, copper, silver, and others, which was expected. That's what we were waiting for a month before, and it was wonderful. It just got a little bit ahead of itself, and I think it's a normal technical correction. I don't see anything fundamentally different than compared to, say, 3 or 4 months ago. Longer term, I think it's absolutely fine. I think it's just basically technical profit taking. I looked at basic technical indicators. They just got overbought. Just like any stock or any asset class, when it gets overbought, people take profits. Nothing is wrong with that. I think we went from a rally mode, trendy market to a range bound market. So I view it as a correction. I think the next couple of months will be going back and forth. I think if you're a long-term investor in gold and silver, there is not much to worry about. I think it becomes more of a trading, range trading market. So if you're a short-term trader, I think it's a gift. If you're an investor, you have to be patient for a couple of months, maybe until August, September period, which usually starts seasonality-wise. It's good for metals. I think that's where we're at. I looked at some indicators like RSIs, they got really, really high, and MACD got overbought. Something that most technical traders know. No worries in my mind. Just wait it out, and I think if it corrects a little bit more, I think it's a buying opportunity. Whether you do it short term or whether you accumulate it long term, nothing's wrong with that. So, and it's kind of related to maybe fixed income market. Maybe we can talk about that a little bit. So they all interrelated. So it's kind of an intermarket relationship. That's my, kind of a 64,000 foot view.
Got it. Well, let's start looking at your indicators if you don't mind. Yeah, pull up and give us a
Yeah,
visual of what you're seeing.
talk a little bit about a bond market. And it's a chart of TLT, or proxy of a bond market. And if you draw a line of all those tops, recent tops, we're trying to break out. In other words, from a technical standpoint, bond markets is starting to look bullish, meaning interest rates are going down. What it's telling me is the economy is slowing down a little bit. I'm not projecting a recession, but I think that inflation becomes, it's still out there. It's still a little bit too high. We're not at 2% yet, but I think we're going in terms of inflation in the right direction, which means that the bond market probably will continue to go up, at least for the near term, maybe a couple of months or so. And that should cause the dollar to decline. And I'm getting more and more bearish on the dollar, on the US dollar. So that should be bullish for metals. The reason I'm saying that is any sell off in gold or silver is temporary. So that kind of confirms what I've been saying. That is just a technical correction. The market got tired of going up. And let's just trade back and forth and buy every pullback. So I'm not projecting a recession, but based on economic reports, it it's kind of stable. Stable meaning, oh, one report is, oh, inflation is a little bit too hot. And then the next day, another report comes out, it's like, no, it's not hot anymore. We're moving in the right direction, and so on and so forth. So I think if we see a little bit of a slowdown in the economy, then the Fed is going to start printing again. So not necessarily printing, but they'll cut rates at least once this year. If you look at Fed funds futures, right now they're pricing in only one cut, which is probably fair. Maybe they'll do it before election. Maybe they'll do it not the next meeting, maybe in 2 meetings. That's kind of my thinking. So it's kind of a slow process, and that's going to be bad for the U.S. dollar, and positive for the metals. It just takes a little bit of time. So it's just a little bit of time.
To get exact. Okay. So what is the bond market showing us? Is the bond market showing us then that yields have peaked here and that's why they're starting to rally and that the Fed will be more than likely cutting here, I don't know, in the next 2 to 4 months?
That's what I'm starting to think. Yeah, I think it's a reasonable assumption because the bond market is behaving well. Everything is stable. If you look at just about every market, that's what I'm expecting for the summer is stability. Other than some, horrible events in the world. You look at the stock market, it had a very good rally from November all the way to like April, May, and then corrected 5%, and it went up again, and then it's correcting again, it's just going nowhere. I'm expecting the next 2 or 3 months, whether it's stock market, whether it's metals, whether it's energy, to be stable and to be in the range. So, and which is good, which is absolutely normal process. This summer we shouldn't have any major news, major events. So I hope, and I think, well, before the election, we'll start moving, so people will get emotions, and investors will start making bets, and so on and so forth. But for now, I expect this summer to be a summer of stability. And stability means no major moves, no major crashes, sell-offs, or incredible rallies. So, and that's the message of a bond market at the moment. That's that's
Got
where
it.
I am.
Okay, so let's project that to the metals markets then. You just mentioned that, especially specifically gold, will be trading in a range through the summer. And then what do you
Mhm.
expect going into the fall
Into
or
the
into the
fall,
fall?
I think we'll see more weakness in the dollar. Well, as I mentioned, I'm getting more and more bearish, and the bond market after the pause going to go to, and the gold market after the pause will go to the all-time highs again. I think the fall will be bullish for gold. There will be some nervousness around elections. There will be new economic developments. It's too premature to predict them.
Mhm.
And no matter how I look at it from a fundamental standpoint, it's bullish gold. Let's take a look at the chart. I'll share the screen up. I believe I have the chart of GEO a year or so. You obviously saw that huge rally going into the end of April. And we're just correcting. We probably can correct a little bit more. We're at 215. The worst case scenario in my view is maybe 205. You see the basic indicators like you see RSI here and MACD. I don't want to go into very complex ones. They just correcting. It was a little bit too high. They were overbought. This MACD is going to start to turn up soon. I'm not sure if this is a buying opportunity at the moment. We're at 215, but somewhere between 204 and 215, you should start accumulating again. So you pick
Got
your
it.
spots, and long term, everything is fine. This is not a major top by any means. And let's take a look at silver. See how high it got very fast.
Yeah.
So from 21, from the long term range, it broke out, went to almost to 30, and it's just retracing, maybe back to 50-day moving average, maybe back to 25 or so, 24, but I don't see it going much lower than that. So you saw a little bit of divergences here. Absolutely normal correction in the bull market. No worries. Absolutely no worries.
Two questions about silver there. Do you see us going back down to where that gap was? And
I
in
think
April? Yeah.
it's a possibility. So if you see those tops all over, right, they're all about the same level.
Mhm.
They are at around 23, 24 on the ETF. I mean, 20. So that's probably the most we can get on the downside. The
Got it.
most, if
Okay.
if we get there. So well, that's absolutely fine if you're a long-term investor. I mean, you have to be prepared for that. No worries. And short-term trading, I think it's going to be a gift if it gets there.
Got it. Now, if you're a stock trader, would you start accumulating precious metal stocks in this area, or would you wait a little bit longer?
I would start. So I would start, but knowing that it's not necessarily the perfect point, but it's sort of like this is your perfect point, and we should right here at the top of it. So if you bought this and then you suffer for the next couple of weeks, no worries. So it's not going to crash. So yeah, couple more days of downside, and I think it's a good area to start accumulating either your favorite stocks for this particular ETF, or if you trade futures on the futures side. Also pick your options. You know, I'm an options trader, so I always think in terms of options and longer term calls, longer term meaning maybe December, you know, something looking forward for 6 months or so, whether it's silver or gold, that's where we are. Also crude oil, which I'm kind of selling off the last 5 days in a row. I think it's telling us it has a little bit of an economic message. That's what I mentioned, that we're slowing down a little, and
Yeah.
therefore the demand might be a little bit sluggish, maybe, and the production was cut. Um, you probably heard. So a combination of those. So crude oil, it's probably a little early, maybe a little bit early. So, but gold and silver are getting there to a point where, yeah, let's start accumulating. Let's spend the next month or two accumulating, but not being overly short-term bullish. So
Yeah.
longer term, yes. Short term, just don't be surprised if it goes back and forth. You get 3 days out, 3 days down, you get things of that nature. Absolutely normal. Good for short term trading. That's how I view it.
Got it. Let's talk about crude. Can you pull crude up? Is that something you can pull up?
Absolutely. Yep.
Yeah. Tell me
Okay.
what you're seeing here.
This is a much bigger correction than gold and silver.
Yep.
You can draw a trend line from here to there. We're about there. We're kind of getting there. RSI is getting a little bit oversold. It get oversold more because if it's a demand problem, then we can sell off a little bit more. So crude oil can go into high 60s, something like that. Possible. Also, I'm looking at the charts of like XLE, which is a major energy equity ETF.
Yeah.
Just touched the 200-day moving average today and bounced off of it.
Okay.
It might be a little bit lower because 200 days not necessarily the greatest indicator for that particular ETF, but it's getting there. It's like an 89.68 right now. So I think 85 to where we are right now is a buying point again. But I believe that if it, as I mentioned, if it's a demand problem, this one may get stuck here longer than gold and silver. So I'm not that bullish. I don't have any positions in energy at the moment. I'll be waiting for my spot. So hopefully the market will give me a little lower prices.
Got it. So if you're waiting for your spot, what would those spots be? You want to see it in the 85, 84, 85 area before you start
Yeah,
becoming
something,
interested?
something like that. Something like that. It's not necessarily the exact point, but where the indicators get even more oversold. So let's take a look at XLP. Again, 200-day moving average right here, probably a little lower. I would like to see indicators to sell off a little bit, maybe have like some kind of scary day. But as far as crude oil is concerned, I'm more bullish on energy stock equities.
And why
So
is
I'm not afraid of accumulating now. The crude oil as a commodity, I'm not quite sure yet. So I have to wait. I have to wait. But accumulating gold stocks or ETFs, starting here and a little bit lower, that's already a decent price range. But I'll be a little bit more patient than gold and gold stocks. Also, one more chart that we forgot to talk about, GDX, which is the gold ETF.
it?
Well, gold went to all-time highs, GDX didn't. So, and
Yeah.
I think it's destined to go to all-time highs. This chart doesn't show it. I mean, you have to go a few years back to see all-time highs. So the highs were all back in 2022 or 21. We're at 42 right now. We're at 34. Yeah, we get kind of a support here. I think, well, even if you're not a huge gold bull, I believe that it's destined to go from here to 42. And that is, 25% or so.
Got it. Okay.
So
So,
this is a good spot to get in, or very close to that good spot.
okay. So you're looking to accumulate gold stocks in this area and lower, correct?
Exactly. Starting pretty much, not necessarily today, but for the next few days. I think we're getting to that area where I'm very comfortable. Even being wrong for a few days, a couple of weeks, is no problem. I'm feeling very comfortable with it. There is no reason for them to go much lower. The same thing as oil stock, not necessarily a commodity, but oil stocks, because they still, even at that price of oil, they're making a lot of money, and I'm still kind of perplexed why they're not higher. Another thing that would work for them is AI stocks, and the big technology stocks are having a correction. Nothing's wrong with those companies. They just got ahead of themselves. So they're extremely expensive. I mean, they're trading the average, the PE is 19 and a half. Historically, now they're in 29. So they're starting to correct a little bit, and the money doesn't go away. The money is rotating, and while they're correcting, I think the money will go to energy and commodities, and that would work well, especially towards the summer, the end of the summer.
Okay. So just a rotation out of them then. I mean,
It's
out
our
of
case,
AI
which is bullish for commodities.
to energy. Okay. Excellent. Any final thoughts here before we have you on in again?
Not really. I mean, expect a quiet summer. Knock on wood. Every time I say it, something I jinx it.
Yeah.
I think I'm expecting a quiet summer, range trading, for commodities as well as stocks, which is good if you're a short-term trader. Pick your, buy the pullbacks and, and enjoy it, and accumulate gold, the metals, accumulate them. So,
Okay. Excellent. All right. Thanks, Dennis. We really appreciate your time.
yeah, thank you, Andy. Anytime.
You bet. Bye.